Hey, Larry Gonzalez here with your housing market update. And you know what? Is the president going to fire Fed Chair Powell? Well, folks, he just fired two FTC commissioners. He just fired the head of the FHFA, and he just fired the head of Freddie Mac. Is Fed Chair Powell next? I don't think so. There's a lot of talk about that right now, but I don't think that's going to happen. The Fed met this week. This was part of some of the big news that happened this week. I need to get into that, but let's also remember President Trump actually appointed Fed Chair Powell in his first presidency. And we'll talk about why he probably won't give him the hatchet just yet as we go on. But let's get into the market update. Big three, prices and inventory, they are up, rates are down. Not a lot, but they're down this week, and that is certainly good news, and good news that we needed on the home front. Headline news though, home builder sentiment drops like a rock. The Fed held steady. We'll get into their decision and their actions, and then existing home sales rebounded. All right, so let's kind of get into some of the particulars now. Home builder sentiment drops. 2 months ago in February, we were at 42, down from 47. This month at 39. Buyer traffic, we didn't think it could get much lower than 29. Well, folks, current buyer traffic is at 24. And believe me, I'm talking to realtors every day. And those realtors who are sitting open houses, they did not have many people coming by this last week. So that's a bad thing for sellers, certainly in this market. Future sales expectations, they were steady, and then current sales expectations down, largely because, really, I think it's tariff-related fears, either realized or threatened. The cost of materials, certainly for builders, is going up, and illegal workers not coming to work for fear of deportation. But I really think it's the tariff-related, the high cost-related for the home builders that's really causing their sentiment to be down. So something to look at as we go forward. At some point, we have to see a rebound for the home builders, especially if we want the housing market to recover. Let's look at existing home sales. Existing home sales, big rebound. They were up 4.2% month over month. They were expecting a 3% decrease. So that's a huge change. Annualized pace of sales went from 4.09 to 4.26. The expectation was that it would go down again to 3.95 million. So somehow we had a rebound in February on existing home sales. 42 days on market, slightly up from 41 the previous month. But inventory continues to climb up to 1.24 million. That's about a 5% increase. 21% sold above the listing price. So there's still a demand. And here's the big news. First-time home buyers, you're up above 31%. And I got to tell you, this evening, I spoke to about 20 young adults at my church on financial literacy, and we were talking about home ownership versus renting. And every single one, I asked if they wanted to buy a home, and every single one of them wanted to buy a home. So the dream of home ownership is still there. We just need to educate. We need to give them hope, and we need to give them opportunity. We need to give them homes. There got to be more homes, right? And they were just not there yet. But that was really good news, up from 27%. All right, I wanted to do one big graph, and I just couldn't get it done in time. I wanted to show the rate impact on inventory in Oahu. All right, so we got two charts here. We have the VA mortgage rates, and then we also have the active inventory of houses. This is single family home and condos in Oahu. And I want to start in 2020. All right, you can see we had a huge amount of inventory, near 3,000, about 2,800 at the beginning, right as COVID hit. And you can see interest rates drop on that top chart, and they stayed low through 2022 or through the beginning of 2022. And you can see with those rates being low, look at how the active inventory in Oahu fell off a cliff. We're talking 2,800 down to about 1,300 homes on the market because rates dropped so much. Then you start seeing in 2022, interest rates go up. All right, they go up, and you can see all through 2022, interest rates went up, they stayed up, and you can see inventory rose a lot. Okay, and then what happened in January 2023? You see this drop in interest rates. Well, guess what happened? We got interest rates, you can see on this chart where the interest rates dropped into the fives and from January to March of 2023. Look at what happened to the inventory. It fell off of a cliff. But then guess what happens? Interest rates shoot back up. They shoot back up higher than they were before, and we go above 7%. And these are VA rates. You can see that inventory went up. Now, rates have stayed largely above 6%. They did go below 6% in September, October this year, but you see that kind of flattening of the inventory, but the inventory didn't really go down. And I think that is in larger part because of the condos on the market just really shooting up. You saw that happen, and that's kind of why we see inventory still going up. The point of this is every time interest rates get into the fives, you can expect to see inventory come down. And if they stay in the fives, this 3,000 inventory that we have of homes right now, active homes, you can expect to see that go down, and you're going to see the market get flooded with buyers again. All right, so just something I wanted you to see. I'm going to try and work on a graph that combines the two, but not there yet. All right, 10-year treasury. All right, again, Fed funds rate does not control mortgage rates. 10-year treasury and the 30-year fixed rate mortgage, they kind of go hand in hand. And I want to show you this because last time I showed you this, the 10-year treasury was basically hitting a floor, and that floor was a 200-day moving average. That's that blue line across the this chart here. Thursday, we actually went below. We went well below that 200-day moving average. We ended the day slightly above, but there is a lot of room below that 200-day moving average. And if we get some positive news with inflation next week, we could see staying below that 200-day moving average, which will be very, very good for the 30-year fixed rate VA conventional mortgages. So just something to take a look at. Yeah, rates did come down this week. We'll look at that right now with the VA rates. We started slightly above 6.25% at around 6.26, 6.27 to start the week. And every day this week, rates have come down a little bit. Still not the lowest that we've had in March, but lower than they were as we ended last week. So that is good news. Again, we have the PCE, the personal consumption expenditure report coming out next week. That could have a positive impact on interest rates going down. All right, so what does this mean? Hey, mortgage apps, for buyers, mortgage apps were up again last week. Not a lot of action, but more applications being done. There were a drop in refinance applications, though, and down 13% last week. But I will tell you this, most of those refinances were not to lower their rate. They were to do cash out refinances. Remember, people are maxed out on their debt right now, credit cards, auto loans, personal loans. And while they may have a low interest rate on their home now, having 29, 30% interest rate on $25,000, $30,000 credit cards, 12% interest rate on cars, 15% interest rate on personal loans, their total monthly payment is actually going to go down by refinancing their mortgage that's in the twos and going up into the sixes. All right, because they're paying off all this high interest debt. All right, so 70% of the refinances were cash out refinances. All right, so where are we at for buyers? Hey, we are in a buyer's market throughout most of Oahu, Mililani, Kailua, Kaneohe being the exception. But everywhere on the west side, inventory is high, and there are opportunities out there to buy. And get sellers to pay your closing costs to help you make that payment affordable. All right, now is the time. If rates continue to go down, if rates get into the fives, I just showed you what happens to inventory. If rates get into the fives and they stay steady in the fives, you're going to see a lot more people coming on the market. And you're going to see more people coming anyways, because guess what? It's moving season, all right? We're getting into the school season, or school's getting out. Families are moving, so that's what you're going to see. Sellers, hey, the best time to sell your home is April 13th through the 16th. All right, I don't know why. I just saw that this week, so I'm just saying it. It makes sense, though. You're right at that time when people are school gets out, the beginning of May, and you start seeing people who are getting ready to move. So put your house on the market in April. and get a quick sale, certainly quicker than the people who, and I see houses, I show houses to clients every day and run the numbers for them, and these homes are staying on the market 60 days, 70 days, sometimes longer. Mililani, Kaneohe, Kailua, still super strong markets. Still seeing some competition. And one more thing, don't undercut. In a competitive market, when you're looking at a home, and I have clients who are looking at Kailua, they're undercutting, they're going below the asking price. It's not going to work over there. It's not. You know, you may think, yeah, hey, I'm saving, I'm going to get this 10,000 less. Dude, 10,000 more isn't that much of a difference on a mortgage payment. So the deal is getting in the home, all right, and then owning it long term so that you can turn a profit and build equity over time. All right, that's all I have for you this week. I had a lot going on. Have a great week. We'll talk to you later. Aloha.